Freight forwarding just got a whole lot smarter. Welcome to Freight Box, the podcast, where your cargo is our priority and transforming your business is our mission. From sea freight to air freight, we do it all, and we do it better. We make logistics seamless, efficient, and stress-free. Subscribe now, and let's take your business to the next level.
Hello and welcome to another episode of Freight Box Podcast. My name is Amajit Singh. I am the CEO of Freight Box, and today's guest is Dylan from Innovate. Dylan, how are you?
Yeah, I'm good, thank you, Amajit. Thanks for having me on. Glad to be here.
That's good to have you. Thank you for taking the time to come and see me today. So Dylan, just tell me a little bit about yourself and a little bit about Innovate.
Yeah, so my name's Dylan. I'm an account handler over at Innovate, and we are a specialist insurance broker mainly for the logistics and cargo industries. So encompassing anything from insurance requirements for importers and exporters, warehouse keepers, freight forwarders, freight agents, and kind of anything that involves freight movements as a whole, really.
Oh, fantastic. So you must be really busy at this time of year, especially what's happening globally and everything that's happening, economy and wars and issues with the Red Sea, the Gulf Sea, the Suez Canal. I guess you're probably overwhelmed with all the workload you currently have.
Yeah, so we've had quite a lot of new inquiries from people checking whether their current cover is correct, that's held elsewhere, maybe not by a logistics broker, but then also from existing clients, querying is their cover correct, and us taking the time reading that policy documentation and making sure that the activities they are doing are covered by the insurances they've got.
Before we dive into all the details of today's podcast, I just wanted to share some phenomenal statistics with you. I mean, the insurance industry, for one, in Europe is worth over $3.5 billion as of 2025, which is absolutely phenomenal. But saying that, there was a latest BIFA report that came out saying that 80% of freight that is moved globally is either underinsured or not insured at all. I mean, that's a phenomenal statistic, isn't it?
Yeah, it's crazy, isn't it? I mean, I think when you look at the insurance for the movement of goods, see there's two elements covered to consider. You have the cargo insurance and marine cargo insurance, and also the freight liability. So for us, it's just about educating customers and making sure that they understand the differences and kind of crossovers between the two, and making sure that they are correctly insured for all of the risks that they have and the exposures that come with that.
Do you think it's an educational thing for customers, or do you think it's actually a behavioral issue that the industry as a whole needs to change with their customers?
I think it's a combination of the two. I think the insurance industry, away from cargo and freight, but also inclusive of that, kind of gets painted in a bad light. That, they avoid claims, they're not paying out on losses, but actually that's not what they're there to do. You have insured perils in your policy, and kind of our job is to make sure you're aware of what those perils are and that you're protected against them. It's not for us. We're not just trying to take premiums and avoid claims. We want to make sure the businesses are protected, but they understand what that protection is and how they are paid out in the event of losses.
I think you've hit the nail on the head there. I think it's trying to understand the level of protection they have, what they actually are covered for. And from my personal point of view, and from my experience I have with interaction with not only my own customers, but from years of experience I have interacting with certain customers, I think it's a mindset from my point of view, whereas a lot of the customers are misunderstanding that they are automatically assuming they're already covered with the shipping lines, where completely it's the complete opposite.
Yeah, exactly that. And whether it's correct or it's not correct, but if a shipping line was taking on that full value responsibility for every single pound of cargo they moved, their premium is going to be absolutely massive, unaffordable, and one claim might potentially leave a shipping line uninsurable if they are insuring that full value of the cargo, which is why cargo and freight exists in the way that it does at the moment.
Oh, absolutely. I mean, if you look at a typical vessel, 6,000, 8,000 TEUs, you're looking at anything from $500 million upwards in terms of commercial value cargo on there. So yeah, completely understand your point. So moving on to actual coverage and having the correct cover in place, what do you recommend customers to do?
So from, if you're the owner of a cargo, there's any sort of financial responsibility there, but always recommend speaking to your current insurance broker, reaching out to a specialist in the industry, and making sure that your cargo is fully insured up to that commercial value, and you're not just relying on your insurancer to let you know about the insurance risk, because that isn't their bread and butter either. They're specialized in moving the freight, but the insurance side is a whole different ballgame. And having that correct knowledge, having the right contact and insurance broker is absolutely massive in understanding what your exposures are.
Absolutely. I mean, I'm definitely for being transparent and being brutally honest with my customers. And for a forwarder, offering insurance is a good thing, but also it could be a bad thing because forwarders don't really understand their customers' goods and level of coverage that actually is required. Whereas Whereas an insurance broker speaking directly to the customer who own the cargo, I think that's a different level of conversation, different level of transparency, and different level of understanding what actual coverage is needed and what actual coverage is not needed.
Yeah, 100%. I think, the cargo owners know their product better than the freight forwarder, the shipping line, or, even the insurance broker does. And if you're relying on your freight forwarder trying to guide you through that insurance landscape, they aren't the experts on it. They specialize in what they do. But having that point of contact with an insurance broker is essential, especially if you're moving kind of high-risk commodities that involve lithium batteries, anything that's particularly theft attractive, so wines or spirits. They all warrant extra questions that your freight forwarder might not know to ask, and will just assume they're covered. But you having that point of contact direct, you'll get asked those questions, and making sure that, in the event of a loss, your policy is going to respond.
In terms of level of coverage and having the right level of coverage, God, that word's a very difficult word for me to come out with. What level of coverage or different types of coverage actually are available for customers?
Yeah, so from a cargo perspective, there's three main ones that you'll find within the UK. So you have a single trip or a facultative cargo, which is whereby on an ad hoc basis, shipment by shipment, you'll go to your insurance broker or potentially even through the freight forwarder and say, I've got X amount of pounds of cargo going from the UK to USA. How much is the premium for that shipment? So you insure ad hoc just for that single shipment.
Well, that's interesting, Dylan. So I always presumed that a blanket coverage policy would cover majority of what a customer would be doing. So are you saying that probably isn't the right approach?
Well, there's two types. So the second type of insurance, the second main type is the annual blanket cover you're referring to.
Yeah.
So that's by a cargo owner will declare to us the annual send-ins for the year. So when cover levels are frequent, they're predictable, you can easily forecast. We can provide a blanket cover for all shipment, which removes that admin of doing it single trip. And it also produces a saving. So on average, normally an annual cover compared to that of a single trip, if you were to take off all the send-ins, you'd probably save about 10 times the amount doing it annually. So there are discounts provided for that, but I guess for some cargo importers or exporters, it's not feasible. They can't forecast that volume, and that's whereby the single trip or even an open cover policy might come into effect.
Okay, in terms of certain commodities that you touched on it slightly in terms of lithium batteries, I think that is starting to become a bit of a hot topic now, especially with the recent vessel fires that we're seeing, especially over the last 2 years or so. So how does that coverage come into play now, and especially with premiums on certain commodities?
Yeah, and again, this all loops back to having the right cover in the first place. If you declare to your insurance broker that you are moving lithium batteries, that will be factored into the policy. There'll be extra questions asked, such as what charge capacity do you ship at, what risk mitigations in place to prevent these kind of losses, and all of those extra questions, so that when a claim does arise, coverage isn't an issue because you already have that built into the policy.
Right, okay. But I'm just thinking from a standard container cargo owner, I would be thinking, well, I'm not shipping lithium batteries, I'll be fine. I'm moving furniture, for example, or textiles, and yeah, I'm okay with the standard policy. Whereas I'm already thinking in my back of my mind that if a container next to my general cargo, if you like, has lithium batteries, decides to explode, that's how fires would spread on a vessel. Poor old me is out of pocket because I'm not covered.
Yeah, and that's it. This is, again, one of the main benefits of a cargo insurance policy. It doesn't come at much point of claim because you are talking about the very large losses here, which aren't that frequent, but you'll have coverage for general average.
Yeah.
If general average is declared on a vessel, so as you'll know, all those costs are shared proportionally by the owner's cargo on that ship.
Okay.
The freight forwarder's freight liability policy isn't going to cover any general average costs, and if there isn't cargo insurance and general average is declared, you will have to pay those costs. So if you don't have the correct cargo insurance cover, that's going to come straight out of your pocket. Whereas by having a single trip or an annual cargo policy, that is covered. That's a peril that is covered.
Okay, how about when containers are lost at sea? I mean, this is quite a frequent event that happens where you see containers going overboard. Are you actually covered on any policy with containers going overboard?
Yeah, so you will be covered. It depends on what institute cargo clause you're arranged on. So without getting too technical on the insurance side, when you arrange a marine cargo policy, you'll have institute cargo clauses. So you have A, B, and C, and depending on what the commodity is, destination, you'll be given A, B, or C clauses. So on A, you'll be covered for vessels washing over, so containers falling overboard. The B and C, those exclusions are going to start to come in.
Okay. I always thought that they were acts of God.
Yeah.
In terms of the weather, the storms, and so forth that happens to vessels.
It depending on the type of cover you have. So, there are what in the insurance industry is a general market exclusion. So wars and strikes, the acts of God, inherent vice, delays, they're all general market exclusions. But working with a specialist insurance broker, if there is a requirement for that to be covered, then we can approach underwriters on your behalf and get that picked up.
Yeah.
But it all, those extra risks carry additional premium. So it's how the whole purpose of insurance is a risk transfer mechanism. So you're paying your premiums to transfer that risk to the insurance company, the benefit loss. So it's how much risk do you want to keep on yourself as a company versus transfer to an insurance company and pay the premiums for doing that.
I mean, you've kind of hit something that is such a hot topic at the moment. We are living in a dangerous world at the moment. There is an active war happening right now, not just one, but several wars, and a couple close to home. How has that impacted the industry right here, right now?
Yeah, so we've had a lot of this war interest, not even as a direct result of conflict, but diverting around the Cape of Good Hope because it can't go through the Red Sea. If we're talking about stuff with a shelf life, foodstuffs, those delays have an effect on the profit that exporter is then making. But delays are normally a standard market exclusion with insurance. So because that wasn't specifically asked to be covered, it was the standard exclusion that isn't covered. It's an impact of the war, the delay. So there's an exclusion on both fronts that applies there.
Oh, wow. So in lane terms for myself to understand that. So if war happened and it was not in my policy, I'm not covered.
Exactly that, yeah. So
Wow.
wars is a general exclusion. It can be covered, but insurers will review that cover kind of on a daily basis. So if conflicts worsen, that war risk or that war element of cover can be withdrawn with 7 or 48 days notice, depending on what's written into the policy.
But if I was an importer myself and I was shipping several containers a month for the sake of a couple of £100 worth of premiums, I am covering myself for £100,000 worth of stock, especially what's happening now. So could you give us a certain example of coverage that a customer's actually had that didn't have before has really benefited them as a business?
Yeah, so we arranged an annual cover. It was only really recently as well. And they manufacture off-road mobility scooters, so they're all-terrain off-road mobility scooters, and they ship them worldwide. So I think they paid about £300 of that annual cargo premium. So, not a lot of money. They had some rough handling at port, and it resulted in a 40 grand loss.
Wow.
Stock in a container. The freight partner's liability was calculated into BEFA terms. I think under the 2 SDRs per kilo, it worked out to be about £800 for 40 grand of cargo value.
Okay.
So had that cargo cover not been in place, there's a £40,000 loss there.
Right.
So, the cargo policy responded, it paid out within 4 weeks. And then the insurer takes on that recovery against the freight partner to try and recover what they can under whichever conditions were used, in that case, BEFA.
Okay, so I guess they were quite relieved to have that policy in place. Without getting too technical, there's cargo that moves from a supplier, let's for example say, in Ningbo or Shanghai, that will then move into, let's say, Southampton or Felixstowe into a UK port, and then it's moved on from the actual port to a UK destination. At what point does marine insurance begin and end, and what point do they actually need additional cover for that cargo to be delivered to the customer's warehouse?
So again, great question, Aljit. It kind of depends on the customer's requirements and what Incoterms are being used and where that responsibility starts and finish. But if it is Ex Works and there's something there, the cover can be door to door. It can even extend for storage at the warehouse. On marine policy, it's not just transit, it can be the storage side as well.
Okay.
But if we focus on that transit side, there are some countries where they're not going to want to do the land transits if it's particularly high-risk territory. So we recently insured some aeroplane parts going to Israel. We managed to get it up to the airport, but then the land transits, insurers wouldn't offer cover on that. So it's really flexible depending on Incoterms and what those requirements for insurance are.
I mean, look, insurance is not probably the most exciting topic to discuss.
I always have this conversation with customers. I think it's one of those things no one wants to be on the phone for 30 minutes talking about insurance, but it's so prevalent, especially now that cover is correct, and having that 30-minute phone conversation is going to save you so much more time if there is a loss further down the line.
100%, I agree with you. I mean, we're all used to getting insurance for coverage for our house, our car, our pet insurance. When it comes down to cargo insurance, it's just staggering how many people just don't take it out thinking they're already covered. I think you're right, it is down to a bit of both behavioural issues and educational issues. In terms of the insurance industry as a whole, what changes have you actually seen over the last few years from marine insurance with forwarders and with customers?
Yeah, so I think the way that the freight industry is moving to kind of be more digital and less onerous from the paperwork side, we've definitely seen that reflected in the insurance space, especially when we look at kind of open cover marine cargo certificate systems.
Yeah.
So that's whereby a forwarder they would offer their customers insurance on a shipment by shipment basis.
Yeah.
We have customers where we've directly integrated that with their systems. So it isn't a separate process to go on and quote insurance. It then, from a staff training point of view, at a forwarder as well, it's not a whole new system they have to learn. It's directly integrated. The process flow is a lot more seamless, and yeah, it's really benefited them from that side of things and the technical judgments that they're making as a company also.
Oh, good. I've just looked at my notes. So what sort of practical advice would you actually give to customers that really want to start to understand a bit more about how they can get the right coverage for their business?
Yeah, I mean, definitely reach out to a specialist insurance broker. That's going to be kind of option number one. It's the best option. They're going to have the expertise and be able to guide you through that. Kind of aside from that is ensure you're not relying on the forwarder to insure your goods for you. That's not what their policy or what a freight policy is designed to do. A freight policy is designed to protect the carrier's legal liability to transfer third-party goods, which is massively different to insuring the goods themselves. So yeah, one, speak to a specialist insurance broker, and two, don't assume their forwarder is insuring your goods for you.
More like pick up the phone to yourself then.
Yeah.
Okay, well, Dylan, listen, I think we've covered some really good hot topics here. Obviously not in great detail as we would like to, but we don't want to be here for hours and hours on boring people about certain topics that are not relevant to their business. But however, how can people get in contact with them?
Yeah, so you can reach out to ourselves at Innovate Insurance. I think there'll be a link below.
There'll be a link below, correct? Yes.
And we cover everything from the marine cargo side, UK road haulage, warehousing, any operations that encompass the movement of goods. We'll be able to assist, whether that's reviewing your current policy documents to making sure you are adequately insured, or providing a quotation, comparison quotes against what you currently have.
Fantastic. Well, please click the link below if you want more information on cargo insurance with Dylan at Innovate. As always, there's also a link below for Freightbox. Well, that's it for today's episode, I guess, Dylan. So thank you for coming and having a chat with us today. Hopefully we'll see you soon. That's it for today's episode. Thank you for tuning in. And remember, at Freightbox, your cargo is always our priority.